Welcome to the land of riches. Hello, future real estate tycoons. Have you ever dreamed of owning a little piece of the world? Maybe a house with a white picket fence, or better yet, a skyscraper with your name on it. Well, you're in the right place. Today, we're diving deep into the glamorous, occasionally gritty, but always exciting world of real estate investing. And don't worry, we'll keep it light, fun, and packed with enough humor to keep you laughing all the way to the bank. Why real estate? 1. The timeless appeal. Real estate has been a solid investment choice since the days of pharaohs and pyramids. Unlike stocks, which can vanish faster than cookies at a kid's party, real estate is tangible. You can see it, touch it, and even live in it. 2. Appreciation station. Property tends to appreciate over time. This means that if you buy wisely, your investment could grow faster than your cousin's beard during No Shave November. 3. Cash flow is king. With rental properties, you get monthly income. It's like having a goose that lays golden eggs, except the goose is a duplex in a nice neighborhood. How to get started? 1. Educate yourself. Before you throw your life savings into a house with a questionable roof, get educated. Read books, attend seminars, and watch YouTube videos. Hey, you're already here. Great start. 2. Set your goals. Are you looking for quick flips, long-term rentals, or maybe even commercial properties? Your strategy will guide your every move, like a GPS, but without the annoying recalculating. 3. Financial checkup. Check your credit score, save for a down payment, and understand your financing options. Remember, banks like people who are good with money. Think of them as that friend who always wants to split the bill evenly, even when you only had a salad. These are the types of real estate investments. Residential properties. Single-family homes. Great for beginners, easy to manage and sell. Multi-family homes. More units, more cash flow. Also, more tenants, more headaches. Vacation rentals. Profitable, but seasonal. Perfect if you live in a tourist hotspot. Commercial properties. Office spaces. Long leases, but higher maintenance. Retail spaces. Risky but rewarding if you get a good tenant. Industrial properties. Warehouses and factories. Low glamour, high profit. Land. Raw land. Buy and hold or develop. It's like a blank canvas. Developed land. Easier to sell but more expensive. How to hunt for property. Location, location, location. This real estate mantra isn't just catchy. It's crucial. A property in a good location can be a gold mine. Look for areas with growth potential, good schools, and low crime rates. Think of it as finding a date who's smart, funny, and has a good job. Rare, but worth the search. You should also consider property analysis. Comparable market analysis (CMA). Compare similar properties to determine value. Cap rate. Calculate the rate of return on your investment. Cash flow. Income minus expenses. Positive cash flow is your best friend. Inspections and due diligence. Always inspect before you buy. Hire a professional to check for issues like mold, structural damage, or ghosts. Just kidding about the ghosts. Probably. Now it's time to finance your investment. Traditional mortgages, the most common way to finance. Requires a good credit score and a decent down payment. Hard money loans. Short-term loans from private lenders. Great for flips but come with high interest rates. It's like borrowing from that rich uncle who charges you 20% interest. Real estate investment groups regs. Join a group, pool your money, and invest in large properties. Less hassle, more profit sharing. It's like a real estate potluck. And how about managing your property? DIY versus property management. Decide if you want to manage the property yourself or hire a management company. DIY saves money but costs time. Management companies are convenient but can eat into your profits. Tenant screening. Good tenants are like good shoes. Hard to find but work. Conduct thorough screenings to avoid nightmare tenants who treat your property like a frat house. Maintenance and repairs. Regular maintenance keeps your property in tip-top shape. Think of it as going to the gym but for houses. Repairs are inevitable, so budget for them. Scaling your empire. Leveraging equity. Use the equity in your current properties to finance new ones. It's like using one credit card to pay off another, but smarter. Diversifying your portfolio. Don't put all your eggs in one basket. Spread your investments across different types of properties and locations. Partnerships. Join forces with other investors to take on bigger projects. It's like starting a band, just make sure everyone knows how to play their instruments. The exit strategy. Selling your property. Know when to sell. Market conditions, personal needs, and property performance should guide your decision. 1031 exchange. A tax-deferred exchange that allows you to reinvest the proceeds from a sale into a new property. It's like hitting the reset button on taxes. Passing it on, estate planning ensures your properties go to your loved ones. It's like creating a family heirloom, but cooler. Your real estate adventure awaits. Real estate investing is a journey filled with highs, lows, and everything in between. It's like a roller coaster, but the kind where you can make a lot of money. So, buckle up, do your homework, and dive in. Remember, the best time to plant a tree was 20 years ago. The second best time is now. Happy investing. And there you have it, folks. Real estate investing for beginners, with all the tips, tricks, and laughs you need to get started. If you enjoyed this video, don't forget to like, subscribe, and hit that notification bell for more fun and informative content. Until next time, keep dreaming big and investing smart.